Hello, traders. We're 2 hours into trading on Friday, July 16th. Let's take a look at yesterday's pick. Actually, this is Wednesday's pick. I'm trying to take some time off during the summer, so I'm not doing videos each day. Please make sure to subscribe to the YouTube channel. Turn on your notifications. I don't want you to get frustrated coming to the YouTube channel and not seeing a video posted. So if you turn on your notifications, you'll know when I'm posting videos. MMM. That was the stock that I highlighted on Wednesday. You can see this nice upward sloping trend line that we have on the stock. I suggested selling it out of money bullish put spread, selling the 200 puts, buying the 197.50s, expiration July 23rd, 50-cent credit. You can see the stock is pulling in a little bit. It is testing that 50-day moving average, so you have to be careful. Market has been a little soft recently. We're still above the strike price, upward trend line still intact. So I like the trade, but you got to be a little bit cautious in here. Make sure that you're watching the market, which let's get to the market. You can see opening gap higher. If you read my pre-open market comments, you know that when the market is near an all-time high, you do not want to be buying these pre-open gaps higher. So you look at the futures, you see that you're going to be gapping higher. Everybody gets all excited. They come in, they buy the opening print, and then you get a gap reversal. When you see 3 red candles in a row like that closing on their low, that is not a good sign. You know that a gap reversal is very likely. We did fill in that gap from yesterday, at least as far as I'm concerned, within a penny or two. And now you can see how we're testing the low from yesterday. We've got a bullish 10P cross right in here. It is early. You can see a couple of tails under body right here just off of the low. I think the market's going to get ready to bounce in here. We've got the 10P cross. We've got the low from yesterday to lean on. We have a marginal new low here, meaning that the market tried to take out that low. And these long candles underneath here tell me that it's not able to do so. So I think we're going to get a nice little bounce today. This will embolden buyers. We have earnings announcements really ramping up next week. Typically, the market is very strong into earnings announcements. Expectations super high. The rate of increase for analysts this quarter has not been this high in over a decade. So they're looking for very, very strong earnings, and we'll see if the companies can follow through. We've had inflation rising, CPI 0.9%, very hot. We had PPI come in at 1%, super, super hot numbers. But right now, the market doesn't care about it too much. How do we know this? TLT got through the 200-day moving average yesterday. If traders were worried about inflation, then you would see bonds going down and interest rates going up. This is counterintuitive. So they believe that the Fed is going to stay pat and that inflation is going to subside and that the Fed's projections will be correct, that this is simply transitory. So that's what the market's telling us right now. It doesn't matter if I believe it or not. That's what the market believes. So that's what we're going to go with. So as long as TLT is trending higher, it should not pressure the market. We have earnings season coming up. That typically attracts buyers. So I am looking for a decent bid through July. Yes, I think that we're going to see these little sell-offs in here. If you look at the daily chart, though, you do not want to be coming in to buy puts right here. Well, why not? This looks pretty weak and it looks very toppy to me. Well, you've got some upward sloping trend lines that come into play. Those are still intact. You don't have any major technical breakdowns right now. If you put the 50-day moving average in, you see that we're way above it. We've got this horizontal support in here. We've got support here. We still have support here. Here's another thing to keep in mind. I've noticed over many quarters that the market tends to rally into earnings. And then as those earnings come out, once the mega cap tech stocks report, that's when you get a little bit of selling pressure as the air gets let out of the balloon. And if you want, you can take a look back here at April 14th, 13th. This is your pre-earnings rally right in here. And then this is where we start getting the reports from the banks. And you can see nice little soft drop right in here. Put buyers getting super excited. Here we go. Here we go. That's it. Look at that big run up. We're going to sell off right in here. So you start buying puts. And then you get earnings announcements and tech companies reporting, blowing the doors off of the numbers. Blam! You get this rally. Now here's what happens after Google, Apple, Microsoft, Facebook, and the rest have reported. The air gets let out of the balloon. This is when you want to be buying puts, not here. And this is time and it's pain if you are a put buyer all the way back here. So be patient. I think there'll be a put buying opportunity. It'll probably come at the end of the month. I believe that the mega cap tech stocks all report on July 27th and 28th. Don't rush the gun. So let's take a look and see what we've got. I want to buy some stocks, and there you can see we're starting to bounce off of the low. And I think that this is going to be a pretty decent entry point for a long position on SPY. So let's see what happens while the video is being recorded. And also, we'll be able to take a look at stocks right now that have relative strength. Why do we want to look for relative strength right now? Because we've had a market decline. So during that market decline, sorry about that, we're able to see, I had an order out there pending. So during this market decline, we're able to go in and take a look at stocks that have been pushing higher. And this is how we'll find a day trading opportunity right now. I want to focus on stocks that are up for the day. SQ, let's see what that's doing. Pretty big pullback. I'm going to go right into Pop Bull because this is going to offer some really nice stocks. This one in particular, HD, is one that I like. It is your pick of the day. You can see how strong the stock had been relative to the market right out of the gate. So let's put up the 10 SI indicator. Orange line above 0 equals relative strength. And there you can see early in the day, orange line above 0. Now you can see strong relative to the market. So here's how you would play it. Hey, Pete, you got your bullish 10P cross. Yep. You got a higher low from yesterday. Yep. You tested that low and had a couple of bullish hammers in here. Yep. This would be a good time to go in and take a look at stocks that want to move higher, like HD. And we know that because, let's also put up the SPY overlay to make it more clear. Market down, down, down. Stock up, up, up. Yes, it pulled back a little bit in here, but not much. It's still up for the day. Heavy volume. Aha, another key ingredient to success. Let's look at that daily chart. Aha, there we have a horizontal breakout. Beautiful. Stock bouncing off that 50-day moving average. So let's recap. You can see orange line just above 0 here on a daily chart. We have a compression right in here, and I can put up my 10 squeeze indicator, and that's going to show me a compression. See the yellow dots right there? That means that the stock was in a compression here. Holds a major moving average, and now we have a breakout on heavy volume on a day when the market has been selling off. So we drill down to the 5-minute chart. Looks pretty dang good here as well. So that's how we play it. I like HD. I think HD continues to move higher. I think this might even be a good options lottery play using that 325 strike price. Options lottery means that those options expire today. So you need to be super, super precise on your entry because you have time decay working against you all day long. So it's a fairly low risk strategy because you're not paying a lot for these option premiums, but it's a low probability trading setup because you've got options expiring today and the move has to happen right here and right now. But it is also a very high reward trading strategy because these options will go from 50 cents to possibly $1.50. And I know because I've seen them trading for 50, 60 cents today. And right now they're probably, I'm going to take a guess, they're probably trading for about $1, maybe $1.20. So in any event, I like HD. That's your pick of the day. You'll also see LOW, both in the same group. Home improvement, really nice there. Downward sloping trend line, breaking that wedge to the upside. Also looks good. Go into the D1. Same type of pattern, compression, breakout. Love it. And here you actually have another key bar, which is a bullish engulfing candle. So yesterday we had pretty heavy market selling. Stock opens on its low of the day. We're going to ignore that explosion alert. Stock opens on its low of the day, and what does it spend the day doing? Rally, 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 right through that 50-day moving average. That is a very bullish candle. Boom, today, right up. And you can see that big gap up right there. And there's your relative strength yesterday. Long green candles stacked, one on top of the other. Put up the SPY just so you can see. And there you can see what the market did. Down, 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 down. And this stock is holding all of these gains and continuing to move higher. What does this tell us? This tells us that right here, when the market was tanking, buyers were so anxious to get into LOW that every time there was a seller, they gobbled it up. How many more you got? How many more you got? How many more you got? Until finally, the stock starts to move higher and they get a little bit more aggressive with their bid. And then today, you get this blow off rally and relative strength. These are the breadcrumbs that we watch for. This is the edge that we use to trade. You don't need to trade the S&P 500 futures, but you need to be aware of what the futures are doing constantly throughout the course of the day. But relative strength is an incredible edge. So it is a surrogate position for trading the market. Let's say that I'm in HD right now. I'm loving life because the market's gone nowhere and the stock is moving higher. Let's say that the bottom falls out of the S&P 500 and we test the low right here. If I bought futures right here, I am going to have my head handed to me when we test that low, and I'm probably going to puke out of the position and I'm going to take a loss. Instead of trading the S&P 500 futures, why don't I find a stock with fantastic relative strength where I know buyers are lined up, and I'll buy some calls. Instead of trading the futures, I am going to pick the fastest horse in the race. That's how we do it. Thanks so much for watching. Please leave your comments. Have a great weekend. We'll see you Monday. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.